Welcome, everyone. Thanks for joining this webinar with Admiral Markets. My name is Chris, and we're going to take a look at strategy webinar today. Before we do that, though, be aware that this video later on and the webinar now is shown to a global audience, but may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more information. Also, please be aware that trading foreign exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer, plus you are aware of the risk involved when trading. Okay, thank you so much for your attention. Today we're going to take a look at strategy, specifically momentum and correction. Momentum, very important in this first step when trading any strategy, I would say, but specifically discretionary technical analysis. You need to know the market structure. Market structure is three things: trend and momentum, that's one; two, support or resistance; and three, patterns. So momentum is a very important part of the first step, and basically patterns are consisting of corrections, sideways movements, bear flags, bull flags, triangles. So momentum and correction gives an tremendous advantage to traders if they can read it properly, and gives just a huge amount of information and analysis that we can use to improve our trading. All right, typically when I'm trading, I'll be after the first step, I'll be then looking for opportunities, how to trade it. Once I know which direction I'm looking to trade, then I will be checking filters, and then I'll be looking at what spots do I want to trade it and how do I want to trade it, with what reward to risk, where will be the stop loss, where will be the potential take profit, or how will I manage that trade. Now, as always, we take a look at the economic calendar quickly to see if there's anything coming up, and we do have a big event, I think at least, on the pound, which will be the GDP growth. And I guess everyone is going to be a bit curious how the second quarter is impacted with the big geopolitical choice that the British had in front of them back in May to choose to stay or leave the European Union. So the Brexit, of course, it's interesting to see how that is going to impact GDP. For the moment, the Brexit seems to be going slow. I mean, we do have a new prime minister, Mrs. May, as you probably know, but otherwise, the Brexit itself seems to be, quite complex. It's not going to happen soon. This is not something that the British want to hasten to, and it seems like they're going to take their time to prepare. And that's not so surprising. I've heard yesterday that the exit of Greenland, which was part of the European Union actually in the past, took 3 years to negotiate, and Greenland is only basically as I don't know, a population size which is very small, of course, in terms compared to other European countries. I think maybe, what could it be? I don't know exactly, 50, 60, 70,000. So it is probably not going to be an easy task, and that's why I think it's going to take some time to complete. Well, we'll find out all those details, I guess, as we go along in the rest of this year. We also have durable goods orders in the U.S., and tonight we got FOMC plus a rate decision, and everyone is going to be curious if there's going to be any signal about a potential rate hike in the near future, or perhaps later this year. All right, so regarding our topic of today, well, let's first take a look at the market and see what's going on. With regard to the euro dollar, yesterday we were talking about basically how far price could retrace. And if I remember correctly, price was about here, I think, making some downside at that point. But I said we need to wait for basically a bearish candle. Otherwise, this upside is not finished. And indeed, this candle turned bullish. As you can see on the hourly, in fact, it was a downside. And then we got one more push up to the fibs I was talking about, I had a fib basically from here to here, and price not totally reaching the 78.6 fib, kind of missing it by about 6 pips. But ultimately, it came into that resistance zone and it turned around. Big wick on the hourly. That was, I think, a decent signal. And price fell yesterday a bit, but not a lot, about 30 pips, which is small movement. Now, at this moment, it looks like a bear flag to me. And part of that is all has to do with the theme of today, which is momentum and correction. We certainly see bearish momentum, and we see upside correction anytime price is moving up here, basically here, it seems corrective. So let's see if we break. We already broke this support level. That could be already basically first indication of a continued downside. But if we then zoom into the 15, we see a smaller correction after the break, like this. And that could be the second break. This is perhaps the first break, and this could be the second break. The break of the break is often actually the better one. So if price manages to push through this correction, manages to go below 109, probably 109.75 would be nice to break 109.75. Then we could see an extended downside, I would assume, and we could at least see price testing the target, which would be 109.20, I would say. That's a fairly modest target. Could certainly go further. Could go to 108.80, 108.40, perhaps 108 even. So, yeah, there could be some extension and potential gains there to the downside as this is breaking lower and lower. Obviously, there is momentum to the downside, as I just said. There is a good trend line that shows that too. 4-hour chart, we see a downtrend now occur with clear lower lows and lower highs. For me, still this 108 right here, or 109 and 108 are important levels to deal with, because those are big bottoms. So those need to break if we really want a big long-term downside. But for the moment, a retest of those levels seems likely. Now, if something else is going on and price breaks through this resistance trend line that I have on the chart and starts to show momentum like this to the upside, and then shows a pause like this, that's when momentum and correction is showing us a shift in psychology. In that case, downtrend is broken. We see strong price action to the opposite direction and corrective price action to the downside. Well, then my view is different. If this were to happen, I would actually favor looking for longs as the triangle breaks, for instance, or maybe a small zigzag like that, and try to catch the bounce at minus 61.8 target, for instance. Those could be ways to trade an extension of the upside. So this is basically how momentum and correction can help us. We see bearish momentum at this point, and we see bullish correction for the moment. Therefore, I favor downside trades. But if we get a break of the trend, downtrend, and it's accompanied with bullish momentum, and on top of that we see a correction, obviously the dynamic, the market structure is totally different, and the analysis is changed, and I'm looking for different direction. Those types of clues can help us easily, or maybe not easily, but it's doable to stay flexible like this and adjust our trading plan to what's really going on in the market. All right. If we don't use momentum and correction, of course, the trend is a very powerful concept. But how many times does price not make an impulsive correction? How many times do we not see price making an impulsive zigzag before the trend continues? And if we only use trend, we'll be shorting it here, get caught in a correction that actually extends, and that's easily a loss. How many times will we not be trading the last part of a push up before we get a bigger correction or reversal, and we take a trade here, and we don't recognize that the trend is slowing down, or get caught here, and or get caught in shorts here. Using momentum correction, our analysis is just so much more rounded and more informative. All right, now what is correction? What is momentum? And how do you recognize it? Are maybe questions that are popping in your mind. And we're going to certainly answer those. But first, I still want to take a look at some other pairs. Excuse me. All right, so this breakout didn't go anywhere, actually. And well, the 4-hour candle showed it. I was saying we need a 4-hour candle that is close to the low. Well, this is obviously the opposite. The close was right at the open. We have therefore a big wick, and price moved up a bit after that. It's really going sideways, and I think it's waiting for GDP numbers. It's really not going to break anywhere before those. It's pausing until we get those numbers, and when the numbers are released, then it probably will move significantly, I would expect, but it will probably move at least a decent amount. For the moment, though, price really not going to go anywhere until that point, and it is in a triangle at this particular juncture, and still waiting for the break to the upside or to the downside. I think both are equally likely. All right. So dollar yen. All right, dollar yen did not really make the downside I'm expecting, and one of the reasons is the strong momentum. Yesterday, I was talking about how this was a good breakout trade. My wave analysis was showing the potential ABC, and the price was heading lower. And I said, well, there's a good chance that it could correct and then make a downside again. And that didn't happen. Well, one of the reasons that we could know that is once prices start, its leg to the upside here like this, it starts to build momentum, we at least want to wait for a zigzag. So one thing we could do is put a fib like that. And we know that in that case, we're not going to be shorting until price reaches those targets. Now, once it reached the minus 61.8 target, we see pretty strong momentum candles. Those momentum candles are not candles you want to short against. Those are strong, those are big, with closes near the high, and those will not respect that fib number. All right. Even though it's a strong fib number, if you see strong momentum candles, then those levels will break. Think about it. Not every level can be respected. If every level would be respected, if every single support or resistance level, if it would be always used on all time frames, price wouldn't go anywhere, right? It would be very difficult. So sometimes we need a break. Sometimes the price needs to make a momentum. So when you see candles like this, and I'll explain that a bit later in more detail, then there is a very good chance that prices are going to break through that. So using momentum and correction would have given you the ability to avoid shorts, even though I thought there was a good chance that price could make a correction. I was talking about yesterday already that it could be a bear flag or an ABC zigzag. Now, it was obviously not a bear flag, and how it then could turn back down. I could still do that, by the way, don't get me wrong, but you have to realize that the momentum up was relatively strong and went pretty far. Considering the upside momentum, I don't think shorts are the most interesting at this spot. If it would have been a classical ABC zigzag up to here like this, then and then showing struggle, I think it would have been still okay for a retest of lower fibs. Now I wouldn't be looking for that. The momentum, in my opinion, is too strong to the upside. Even though price would go lower, I would have no regrets in not taking this. Now, so that's how sometimes you see momentum here and you see a correction here. That was one of the reasons why, downside trade seemed good and likely, and that's what happened. We got a good downside trade, And we were not, you never know how far this pushes. It could have made a slow correction and kept pushing. But the momentum to the opposite direction then indicates that, hey, listen, the market is communicating to us it's a certain language, really. Momentum correction is a language. And if you know that language, you know it's signaling to us, listen, that was a great ABC to the downside, but don't expect too much more because this is momentum to the upside. So price basically taking us back to the 38.2 fib. And if we actually use the fib from the entire upside, we'll see that was a pretty neat hit right there. Right there, 38.2 fib. So we see that price, I should have used the entire fib. I used a smaller fib. Should have used this one. This in fact looks a lot neater with the target and the retracement fib. Really very nicely giving confluence there. So I don't think I talked about the buy, unfortunately, at all, but that can happen. I didn't have my, didn't expect such an early bounce. I was expecting a bounce deeper. All right, so unfortunately, that was a miss. That can happen sometimes, but the momentum here suggests to me that we can see a correction and a continuation up. So from that point of view, I think that at this point, I would expect the dollar yen to stay and make a triangle and then break to the upside like that. And that could change again if we see, of course, price lingering here long and we see all of a sudden a momentum like this and a bear flag like that. I'm not sticking to my previous position. This is always the case where you want to incorporate the new information that is available, right? Why stick to analysis that is 3 days old if you can use new candles and new information to take the most likely and best trade available? All right, so that's how I approach it. This was a good breakout trade. That was clear. Now, this was a good bounce in retrospect, but I didn't see it beforehand, so that was a pity. And at this moment, I think that the next acceptable trade would be a bounce here for upside. All right, but what do I want to see? I want to see first a correction. And if that happens, I can put a fib from here to here, and I would expect price to make a triangle somewhere in this zone. Zita, that's a great question regarding whether a candle is exhausted or a high momentum candle, and that's definitely on my list to discuss. I'll just quickly see if there's something we can take a look at still before we dive into that theory. Okay, I was looking for the Aussie to get to 75.75, and it basically missed. It went to 75.64. That's a shame. We hit the 272 target. Fell a lot, but yeah, that would be a shame. But if you manage to get out early or manage to trade somehow and get those 55 pips instead of 70, then that would be great. If not, that would be a pity. Otherwise, it pretty much did what we expected. It went back to the fibs, bounced at the 38, went actually a bit lower, went to the 50, and made that upside. Kiwi did not really follow suit as much as the Aussie. It's retracing lower. Let's see. All right, the pound odd did make a downside, hit the 272 target, but went a lot deeper than I expected, 88.6 fib. Then went to the target, is now moving up. So things are changing a bit. Let me quickly move this away. And this breakout is looking weak and is certainly showing no struggle. Look at this candle here on the pound odd. That looks like a massive outside bar. There could easily be some upside retracement based on that. That's a candlestick pattern that is showing that the bears are having difficulty. You see price stopping at roughly the 50 fib, not being able to break through that. This could be a bigger zigzag, although it doesn't look that impulsive. This could actually turn out to be this type of momentum correction momentum. And for those that like Elliott waves, it could be an A, B, C. All right, so let's dive in. Well, at this point, I think price needs to break above the high or make a deeper correction. For instance, down to 74.60, 74.80. Those could be turning spots. Could be interesting to look for potential longs as it retraces, if it retraces. And basically try to ride part of that bigger upside. I think that seems the most likely or most interesting at this point. On the pound odd, euro odd is rehooking back to the support, and could be interesting if it closes above resistance. Let's see how to draw this one. All right, if it closes above it, makes a bit of correction, then there's a good space to the upside. All right. Let me take one more look at the Aussie here. At the current pace, excuse me, if this is a bearish engulfing twin at the end of the day, that could be an interesting signal for downside if it retraces a bit tomorrow and then makes a fall. But I would be looking for tomorrow. Well, the same thing could be said, of course, like the pound odd. Also, the Aussie has an outside bar. It does look like Aussie weakness at this point, indeed. And if on a 50-minute chart, we see again the retracement, just like the pound odd, like this, zigzag up, that could also be a turning spot. Or if it were to break, make a bear flag and then break again, those would be definitely things that I think are interesting to trade the Aussie. Plus, of course, the long-term perspective, looking at the daily candle as well. So, yeah, things are turning around a bit, as we can see on the yen, on the Aussie, and that's not surprising. Those things definitely happen throughout, in a week. Typically, that is actually very normal for momentum to switch after a couple of sessions. All right. Any call outs for trades? Yeah, I'm analyzing them, and at this moment, I think that if I look at the pairs that we just saw, probably the best one is maybe the pound odd, I would say, or the Aussie, I guess. But I think the pound odd may be a bit better. Well, let's take a look at the pound dollar again. It also depends, of course, what the pound is going to do. Obviously, which one of those is better in 1 hour, 20 minutes from now. If the pound moves up, Oz is going to be better. If the pound moves down, then the pound Oz is going to be better. So that still depends on the news event that's coming. The euro dollar, I think, does look good. If we get a break, I would say a candle close, preferably below the previous low, with a candle close near the low and below the previous low of 109.80. That could be, I think, an entry right there on that candle or on the retracement of the candle. And the yens, I'm still waiting for correction. And what else? Well, those are the ones I think we looked at. Yeah. Euro pound still looking for upside if it were to break 84.2025. Not immediately, but here too, looking for a good breakout candle. All right, so those are basically the majors. Um, Euro dollar and the Aussie seem the best, I think, today. And the pound could be interesting, but I have to really wait for the news event. In any case, I'm looking for a break of this triangle. Now, regarding momentum and correction, there are a couple of things a couple of characteristics I want to tell you, and then I want to show you a couple of ways I think you'll find interesting how I paint momentum and how I observe correction. One way of doing that, all right, um, in a different type of charting package um, that I use for smaller time frames as well, that I use for scalping purposes. And so I think you'll find it interesting. But first, before I do that, I want to explain you what is exactly momentum and correction. All right. Momentum is basically one directional price movements. Fast move, one directional is moving away from the moving averages. So let's put moving averages on this chart. So momentum is where we have the majority of candles going in one direction. And a decent majority, 75%. The price typically is moving away from short-term moving average at least, at the very minimum. Sometimes also away from long-term moving averages, which means that it's in a trend as well. All right, because if you look at the long-term moving averages, that would indicate, if it's below it, that would indicate a downtrend. But if it's below these short-term moving averages and moving away quickly, that's momentum. All right, so that's another characteristic. You would typically see not only a majority of the candles push down, but you would see that, or higher, I mean, in this case down, this example, but you would see not only a majority, but the candles have a big size relatively, and the closes are near the low. Those are all characteristics of momentum. Typically, I would like to see in retrospect, of course, you can all see that this was a strong swing high, swing low. But sometimes it's a bit more difficult to recognize when it's really starting. So, for instance, here, we see now that this moved up in several legs. But at what point do we know that it starts? So, the starting spot of momentum is basically at the very minimum, I would like to see 3 of those bullish candles out of 6 candles. That's for me the signal that a momentum could be starting. So we see that right there where I have a blue circle and a green arrow. And indeed, we see this momentum finish, we see a small correction, and we see that continuation, a bigger correction and continuation. All right, so that's just my rule. That's not a rule that is necessarily, I've never seen it anywhere, this rule. This is just my rule. It's not something that I think is widely used necessarily, but I do think it works well for me. It gives me an idea, when we can consider the momentum to be valid. Now, still the other things are, of course, important. The momentum candles, once again, are typically big, have closes typically near the high. You would see them typically move away from the moving average or trying to move away. And all in all, momentum is then a swing high, swing low, a one single leg that is fast directional move. And in that momentum, you would see only smaller correction candles. The candles to the opposite direction are small. They're less visible, less frequent, sorry, and they're basically more indecisive, and the closes are random. All right, so does this make sense regarding momentum, first of all? And then I'll move on to correction. Okay, so correction is where price basically makes a sideways or basically goes back to the moving averages, either by going sideways through time or an impulsive correction. All right. So when price basically, let's take a look here. Here price is moving away from the moving average, that's impulse. And here price is going back to the moving average. All right, so that's where it's correcting. Anytime it goes back to those moving averages, it's correcting. Now it can do that slowly or fast. If it's fast, it's actually an impulse too, but it's a counter trend impulse. If it's slow, then it's a correction. All right, here it's a slow correction. All right, so it's a corrective correction in a way. When it's going fast, like here, it's an impulsive correction. Whereas if you see fast price action with the trend, it's an impulsive trend continuation. If you see slow price with the trend, it's a corrective trend continuation. All right. So when you see a correction, when you see price basically making a correction like that, the candles are going to be, as we already know, small. Typically, we're going to see a mix of candles. There's no clear direction. And yeah, there's basically no clear like closes, etc. All right. The bears and bulls are a mix, 50-50, etc. So it's basically the opposite of an impulse. Now, how do you know when a correction has started, and how do you know when a momentum has ended? Because all we have is momentum and correction. Any price action, momentum and correction, that's it. There is nothing else available in the market. It's either momentum or it's correction. There's nothing in between. It's either that or that. There's nothing else. Let me say it this way. There could be something in between maybe, but there's nothing else that we can choose from. So how do we know that one ends, one starts? So we already know how momentum, I think, starts with 3 momentum candles out of 6 are visible. And we know how to recognize momentum swing because this is obviously a momentum swing. You see one directional move, moving away from the moving averages. We see majority bullish, good bullish candles, closes near the high. We see small bearish candles relatively. Clearly, swing high, swing low is bullish. And we could have already had an idea that we were going to get a bullish swing high, swing low down in here, or at least here. All right, so pretty early. How do we know when the momentum finishes and when correction starts, or the opposite momentum might start? So a rule I use is counting candles. I count candles basically, as I said, for momentum, I want 3 out of 6. For momentum to finish and correction to start, I need to see 5 to 6 candles not breaking a high or low. So let's take a look at an example. Let's see, somewhere recently. Let's use a different pair because this has such a big fall. But, oh, okay, why not? We can even look at that. So 5 to 6 candles. So that means, we had strong push here. 1, 2, 3, 4, 5, 6. Somehow I thought it broke on the 6th. Let's see. All right, let's take a different example here. Here, 1, 2, 3, 4, 5, 6, 5 or 6, basically. Didn't break this bottom, so this momentum was over, and price is in a correction. All right, and indeed, it's continued to correct for a while. when it reaches 5 to 6, the correction will typically last for 13 or more. 13 is kind of the minimum. It could easily be more. In this case, we had, hang on, 33 candles before the bottom, before the low is broken. All right, so but that's how we know that, that's how I know, that's how I use it. Momentum is over when 5 to 6 candles have not broken the higher low. Now, why is 5 to 6 candles important? Because when you look at momentum, let's take a look at a different example on like the euro yen. If you look at momentum here, for instance, what do you see when price is falling quickly? You see every candle mostly with the lower low and also often a lower high in a downtrend here. Now there are a couple of exceptions. Here's one candle that doesn't have a lower low. Here's another. And here's another. And here's another. So yeah, there are a few candles that don't have lower lows. But all in all, quickly you see the second or third candle pushing again. And in this case, we really see a quick push, but for instance, let's find an example here. Here you see every candle pushing, 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 with an exception of this one is a 1 candle pause, here's a 2 candle pause, and here there are about 5 to 6 candle pauses. Now, even though there's a 1, 2, or 5, 6 candle pause, price still continues higher, as you see. Only here do we get a bigger correction. So that is why I'm not, as soon as 1 candle or 2 candles do not push higher for a higher high, it doesn't mean that the momentum is immediately over. That's why I think 5 to 6 candles is important, because that indicates that a substantial time price has not been able to follow through and keep with that pace to the upside. Anything with lower than 5 to 6 is not basically not over. It can still push easily. All right. Now, once you have 5 to 6 candles available, be aware that it's a rule of thumb. It is not a 100% guaranteed thing like anything in trading. Second of all, especially yen pairs are more vulnerable to breaks after 5 and 6. I've noticed, right? So be careful of that. Third of all, is that even though you get a correction, let's say there's a 5 to 6 candle pause, doesn't mean that the trend or momentum is over. Look at here. We had strong upside. Here we had 5 to 6 candle pause. But what happened? Price went sideways, building a triangle. And after the triangle broke, it still moved up. So all that 5 to 6 candle warning gave us was, hey, listen, this could be a correction, but the correction could go sideways. It doesn't even have to correct all too much deep, all too much down. That's what it did. It went sideways. So we had a clear, good warning about the upcoming correction about here after 5 to 6 candles. And it did. It corrected for a lengthy period of time, but then it did still move higher. It still continued further. So just because there's 5 to 6 candle pause doesn't mean the momentum and trend are over. It literally could just mean I'm catching my breath and I'll continue after that, like here. So when I'm trading and I ride this upside, I have two choices. I could say I'm taking that profit at the 5th to 6th candle because I want to be out of that trade. I don't want to have any management of it. I'm happy with the profit it gave me, and that's it. Or I can say, hey, I think that this can still continue higher. I think that this, yes, I realize the correction is starting, but I think that there's a good chance I'm going to get a sideways pattern, like a triangle, and I'm going to see one more higher high. I'm going to see one more push. I'm sticking in this trade because I just expect price to go flat and still continue. Now, whether, which one of those two, typically both could be equally valid, but if you have a very, very strong move up, then waiting makes more sense. If you have more of an ABC zigzag, where the first leg here is about the same size as the third leg, then you might want to get out of that trade and not hang in, because then there could be more impulse to the downside and all your profit might be gone. So in that case, exiting is better. So those are the rules that I use for understanding when it's momentum, when is it correction, and when does it start and end. So if you have any questions on this, feel free to let me know, and we'll look at that. Now, what I use myself when trading short-term time frames is what I call HARP, and that's just an abbreviation. Let's see. Sorry, there seems to be some warning sign. I'm not sure. Hang on. I use this template on a different PC. Well, anyhow, I know which one. Okay. This one is giving a headache somehow. All right, we'll remove that one then. So I'll solve that later. The idea here is, and this is what I use for trading like a 1 minute chart, 5 minute chart, but mind you that when I do this, it is on a fast moving pair like the pound yen. There are no news events coming around the corner. Like, this does not make sense to do it now with the pound nearby. Certainly, if you get too close to it, maybe now still it's okay, but certainly not, later on. And what else? I'm not sure, but if I think about it, I'll come back. But anyhow, the point of this is that you see basically blue and gray and red candles. So the idea that I use with this, let me just right away go to the 1 minute chart. All right, sorry about this. As I said, I use it typically on a different PC, so I didn't expect that there would be any issues, but let me quickly. All right. Oh, one more. Let's see. I need these to be added. That's giving a headache. Okay. Oh, yeah, it's not that important. So we'll just continue without that. But basically, what I use is the coloring of these candles, which is something that is a discretionary indicator that I made. And it indicates momentum to the upside and downside. Gray is indecision. So one of my methods of scalping is basically looking for the second blue candle or second red candle to appear. So I'm looking for confirmation, not only one, but a second to appear on the chart. And that would indicate the momentum switch from up to down or down to up. At that point, I'm also looking at these oscillators. What I want to see basically is that the price is not making a dip, because what can happen is, like here, for instance, here we see clearly that this was just a dip within still a larger upside, as we can see after that price turned back up. So when I look at the oscillators here, what I see when the second candle, red candle occurs, I see, for instance, here that the long-term indicators like the momentum and the ECS MACD are not set up right. First of all, I see blue here, and I see that the two lines are still above the zero line. So that's an indication to me that although sometimes price, yes, does move pretty nicely after that, I'm not taking that one because the risk of this being a retracement is too high. All right, so for me, the trigger is any change of the momentum candles, but I need confirmation that the structure, let's say the market is ready for an extended fall, not just a retracement. All right, so if we look at the next one here, you can see that the case is different. We see that we see that the momentum here is still tad red, but it's retracing red at the very minimum. The other two though are blue. All right, plus we see that one of the two lines is above it. So that's what I would say is the minimum needed for an upside. And we do see a pretty good move up. Let's take a look. Exactly about 50 pips push up, and the pound yen making some good gains there. All right, so that's basically what I'll be doing, but only in the sessions where we expect good volatility. Only in the London and New York sessions, not during lunch, and news events have to be out of the way. So it's a small window. It might do well in other times. I mean, I saw in the Asian session that today that it moves well. It had some good movements here. Look at this. I don't know how much it was, but it was a really big push. 180 pips, right? So yeah, it can happen. Of course, especially if pound yen can sometimes move decently in the Asian session as well. But obviously, you also see some periods where price is quite uh, can be quite choppy. All right. So at this moment, all right, we see a second red candle right here, for instance. And at that point, let me make this a bit bigger. All right, at that point, you see basically the blue line. Let's check it. Let's check. The blue line is actually still just a bit above. Excuse me, I wanted to say it's below, but it's just a bit above. So yeah, that would not qualify, but it was close. You see, otherwise everything quite much aligned. You see the momentum red. You see the momentum is red, and you see the bars here red too. So more or less very close to being a good setup. And price has pushed about 16 pips at the moment. So especially with the pound yen on the 1 minute chart, even on a 1 minute chart, you would get good movements, good pushes that are substantial in size. You would see movements that would be pretty decent size movements even on an hourly chart under your dollar, if you know what I mean. So I'm not advocating to trade this time frame particularly unless you have a lot of experience and have practiced it substantially. By the way, as an extra warning. But this is one of the things I like to do if I want to trade quicker and close trades quickly within a shorter time frame. All right, I got a comment here that my audio is not working. If you could quickly confirm it's working, that would be great. Otherwise, I have to check it. But you can see, oh, great. All right, let's see. It's working, that's good. All right. So you can see, this is switching blue, red, and you see some false ones here, right? Here's blue, here's blue. Grays are okay. Those are pullbacks. We wouldn't take the upside. We would just be waiting for it to turn red again. Like here, for instance, we see it turn red again and red again and red again. And basically those setups would have worked fine. But you see some false ones where it turns blue for just a second, and it goes back down again. So that's why this oscillator rules are important to filter it out. That's why this one will be filtered out because the lines are below the zero line. That's why this one will be filtered out Um, so though that's the benefit of using that as a filter. Sometimes yes, sometimes the filters remove a good trade, and that happens sometimes. But ultimately, I think they're more beneficial than costly. All right, let's take a look at a few more examples. Like this one, this big burst to the upside was a good trade. Look here at the situation at this point when the switch happened. You can clearly see blue. This was not blue, but it's not needed to be blue necessarily. As long as we're tracing, it's okay. But this has to be above the zero line and blue, and that was so. So everything was met. You got a huge upside there. All right, then we get some Christmas lights again, and prices correcting. And yeah, occasionally, there could be a false trade in here, but ultimately this big upside will compensate that. All right, so let me see. All right, here we go. You see this trade was not ready. And this trade was not ready. Or this one was actually, sorry. See, this would not have gone good, this one. But if it takes too long, I also want to see price move relatively quick my way. So here we already see, the substantial candles going our way. I think we could have reduced the risk. But even if it's a loss, those things do happen definitely. Got to keep your losses small, make those winners count. That's the motto of trading. All right. And often enough, we see the opposite. By the way, Jarshi, you can ask questions to me if you want in the chat. Just feel free to write. I'm not sure what your question is, but if I can't help, I will point you to hopefully a better direction. So make your winnings count. I mean, that's something we often see is the opposite. We got basically often traders that we see just a tendency to stick to our losing trades because we don't want to give up on them. We see it, it's just psychologically very difficult to close a trade that's not going well, even though we have little, our analysis shows that that trade is probably not going to end up well, and we have a chance to take a small loss. It's difficult to take that small loss, just the way our psychology and biases work. Because if we accept the small loss, it was a mistake in our minds that we took that trade. It's difficult to accept mistakes, although it's not a mistake. And taking small losses, I think, is from a psychological point of view, from our bias, difficult. And yeah, it's one of the most important things to do, but it's easier said than done. Many times we hear so many traders talk about keep your losses short, let your winners run. That's a great motto, but how do you do that? How do you actually implement that? How do you really translate those words into something practical? I never hear it. Maybe I mean I don't watch many webinars, so maybe there are some practical guidelines out there. But I think that momentum and correction is certainly one way of doing that. Certainly helps me with identifying when I should stay in or stay out or get out. When can I try to keep the winner running, and when do I expect that it has a good chance of pushing? So momentum correction in general helped me a lot. So there's the classical way of doing that. This is kind of the shortcut method for us because it instantly does that by showing the candle coloring to us. So this is kind of the quick way, but I certainly appreciate the classical way of manually looking myself as well. Um, Now on a minute chart, that obviously things are faster, so this makes things a bit easier, especially in the pace that it's going. Um, so yeah, I really enjoy this. Here you have another good example of downside here, second candle bearish. Everything is aligned here on the oscillators, as you can see. And that's just a great example. You got the red arrow, moving averages aligned, as you can see, red candles, red, 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 red. Everything is good to go. And there's a good fall of 20, 22 pips. Now, that might not seem a lot, but on a minute chart, that's not bad. And sometimes you will catch even some bigger movements, right? So um, that's what I wanted to quickly talk about with you. If you have any questions, by all means, let me know. A trade is right here. I just showed you one here. For instance, this one is an example. Second red candle. Oh, yeah, Oliver was talking about the euro odd. I'll take a look at that. Stop loss would go above the top here. And we could be taking a 2-to-1 trade, for instance, as a TP, or using a fib as a target, and trail stopping the rest of the trade, trail stopping these highs. Normally I have fractals, but I'm not sure what's going on. My fractals are not working, so I have to check they were working yesterday as far as I remember, but today somehow not, so I need to figure out what's going on. Euro odd. Oh yeah, last thing, sorry, just to finish that trade. Here you see everything aligned, those oscillators aligned, as I talked about, and basically that would be the confirmation. So euro odd is in a triangle. You see good momentum candles to the upside, price is going sideways. This is a correction as we speak. Now that correction could be a correction from upside, or it could be basically a bigger reversal as this corrects like this. So it is correction, but we don't know when at this point, I would say it's not clear what the next momentum will be. It could go both ways. That's why I have two trend lines on, because we see momentum here to the downside, but we see momentum to the upside too. So I'm keeping an eye on both trend lines, and a break of support or a break of resistance would be important for down or upside. All right. Now we might not get the break. Price is already using this support for a bounce. We might see a bullish bounce instead, and price could stay in this correction, and there could be a bullish bounce towards resistance. How do I know that? When it breaks this trend line, basically, we got good momentum here, but if it breaks that resistance, there's a good chance that that momentum to the downside is over, and we can get an upside to re-challenge the top of the triangle. So that's what I'm waiting for, a break of this resistance for upside potential there to the resistance trend line. If it breaks support, then I would expect a continuation of this momentum. In that case, this was just a pullback, this was momentum, this was a pullback correction, and price can continue falling. On New Zealand, we find that, let's see. Triangle 2 at this point, and basically you can see that price is in a correction. It seems likely that there's going to be a bullish continuation due to the momentum, but the confirmation would be a break of the resistance. If it does break through the support, then I would still keep an eye on these fibs. Let me take this away. I'll still keep an eye on these fibs, which could be bouncing spots, even though it's breaking to the downside. But due to the momentum to the upside, I would say continuation up is likely. It's not a guarantee, but seems likely at this point. I'm not saying it specifically here. I'm not saying it's a guarantee, because all in all, we had a bearish break here. So one could definitely see reasons to be bearish. This could be a retracement for more downside. That's why I'm cautious because even though there was momentum, this could be a momentum correction and we could see something like this. So I don't want to say that the downside break is not a good trade to take. It could actually be a good trade because this was maybe just a zigzag correction. But we also want to be realistic and realize that the fibs could be bouncing spots. So breaks downside are okay, but be careful of the fibs because they could be bouncing spots. Break to the upside okay as well, but be careful of the target. So regarding one more thing regarding this, I'm showing you the 1 minute chart, but that obviously it doesn't matter. You could be using higher time frames as well. Point is the idea of momentum correction, not the time frame, right? So um, it really doesn't matter. It's not specifically for a minute. The momentum correction concept works on all time frames. It is works is not a good word. It is basically the DNA of the market, and the DNA you see everywhere on all time frames. You see momentum and correction. All right. Well, let me give you one more thing. If you are have any questions about this, about momentum and correction, by all means, just send me an email. If you're interested in seeing if you understood the concept and you want to send me a screenshot, by all means, send me the screenshot and I'll give you my feedback on that. I'll explain my 2 cents on your screenshot. If you want to know more in general about correction momentum, write me. Or if you want to try out, that the way I look at momentum correction, the quick way, again, you can just write me an email. And in the meantime, check out our webinars that are coming up today and tomorrow. Then it takes a look at how to trade Frankfurt Fake and London Open. And tomorrow we're taking a look at breakout and fake out trade setups with high probability, hopefully. No, just kidding. That will show you methods that will make the likelihood of a break substantially better. And we'll show you how and when breakouts are failing and how we can recognize that. So that will be tomorrow. All right, folks, thanks again for joining. Hope to see you in these webinars and wish you great trading. Cheers.